we talk about China, a new administration, the Biden administration may be seen as normalizing relations with China. China's a big market, a big story for us from the U.S. equity markets. Do you see maybe a benefit to our equity markets from any kind of renewed relationship with Beijing?
I think so. I think the most important thing we can look at when it comes to China is its importance as a consumer market. Singles Day this week has proven that an incredible number in terms of sales there. But we remember this isn't just about a one-day thing. GM sells more cars in China than they do in the U.S. Coca-Cola sells more cases of soda there than they do in the U.S. China's a huge and important consumer market and one of the few that's actually growing this year. And maintaining access to that is critically important. The priorities of a Biden administration with regard to China may be more on environmental and labor standards than manufacturing jobs and a trade balance. And that means more of a multilateral and slower moving approach than policy by tweet that's been more jarring to the market in recent years.
Yeah, certainly. I mean, we might be leaving all these sort of midnight tweets behind. Is there a benefit, politics aside, from more certainty, from understanding maybe where we are, rather than getting what appears to might be periodic policy direction changes from Twitter?
Certainly. And I think that we've got to recognize that there's still strategic conflict between the U.S. and China on a number of different fronts. We just see things differently. But, you know, the Biden administration may take a similar tack to what the Obama administration did and work on that Trans-Pacific Partnership. You remember this thing that Trump pulled out of in his first year? That was an attempt to get China to come on board with a lot of standards around intellectual property, around the environment, around labor standards, and get the rest of the world on board with that as well. Given that we've made a lot of progress around the world towards climate change, new policies, new green deals, I think we can see progress in a number of those areas and on the labor front as well. And that means the relationship, while still facing some challenges, is something that businesses can plan around, is a longer-tailed outlook, and one that's probably more business-friendly.
Yeah, I know that everybody's focused on Georgia, and that matters obviously for the representation from the Georgia runoffs. But listen, Dan Sullivan, no relation, by the way, in Alaska winning. Joe Manchin basically saying he's going to go semi-Republican, kind of takes a lot of the heat for the markets away from the outlook of the Georgia runoffs. That said, Jeff, there is some uncertainty. Goldman Sachs CEO yesterday saying he sees, I think it was his word, bumpy couple of months. What should we expect from now until spring when it looks like COVID will be coming out of it?
Well, there's a few things. You know, one thing that's interesting about elections and important is that they're eventually over. And what we've seen in the past, at least in 08, 2012 and 2016, is that elections marked the turning point when outflows from stocks came back to inflows from individual investors as pent-up demand finally lifted the stock market in a broad way, no matter who won. You know, after years of money coming out ahead of 08, ahead of 12, ahead of 16, and ahead of this election as well, we saw money suddenly begin to turn around. It might have taken some time back in 08 for the markets to begin to rally. That didn't happen until March. But we've also seen this playing out in the last couple of weeks. Money has come back into the market. And Brian, the market's been led by a broader group of stocks than just the FANG stocks in the last couple of weeks. And that's a good sign. As this money tends to pour in for the first time in a year or two, it may lead to a more broad advance in the market. I think it's an important takeaway from the election.
Yeah, quickly, what part of the markets look good to you and your team at Schwab, Jeff?
You know, we think there is a rotation under place. We like the financial sector. This is an area that's been unloved for a long time, but as the yield curve steepens up, as loan loss provisions appear to be adequate, and maybe dividends come back in 2021, this is an area that could perform. And as you talked about at the beginning of the 5 o'clock hour, international looks pretty good as well. Financial is the biggest sector overseas, certainly looks attractive to us on relative valuation and relative earnings growth basis in 2021. So think broad diversification next year rather than the focus on just a handful of tech names this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.